It's Thursday and 1 p.m. UK time, so you know what that means. It's time for another jam-packed daily cryptocurrency market with yours truly all in crypto. As always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because I drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we are going to be doing in this video. Yesterday, we saw a lot of relief for the risk sector on the back end of a slightly lower CPI print. And that's where we're going to be starting the video off. We're going to be looking at what took place yesterday and how the markets have interpreted this and what this means more broadly. We know that the markets generally ran into a little bit of a current in regards to inflation going sideways, having previously aggressively downtrended. This coincided perfectly with a bottoming for the Dixie, the dollar, which has leaned on risk. And now we are looking at a reversion of the trend that was previously in place that saw risk do very well reassume. And of course, rate pricing has been adjusting on the back end of uncertainty around inflation, which of course has had a readjusting effect for the markets that we believe is now resuming to what was the trend in place beforehand. So we'll explain all of that. It might be, or I might have overcomplicated everything right off the bat. But we'll explain it all. We'll look at inflation. We'll look at the Dixie. We're then going to go and look at Bitcoin and risk more broadly and how it reacted to this news, because it is a, again, resumption of the broader factors that allowed risk to do well, like the stock market, like Bitcoin, like gold, reassuming with a little bit of fears perhaps going down in regards to inflation, which of course is driving everything. We're then going to talk about gold and silver. You are seeing insane amounts of gold and silver now getting bid up. And we have more news in regards to people buying spot Bitcoin ETFs. And then we're going to be talking about the great game that is being played on people and why we're seeing Bitcoin, gold, silver, and other assets get bid up. There's so much alpha in the saying that the Nikkei, the Japanese Nikkei, is a short yen trade. Bitcoin is a short dollar trade. The stock market, the FTSE, is a short pound trade. The S&P is a short dollar trade. And what we mean by that is the systems continue to proliferate. This is the gap between total net worth held by top 1% that grows coincidentally with the money supply. Why is that? Well, we can take certainly an educated guess in regards to the fact that the bottom half of people live hand to mouth, basically, and the top half own assets. So when you proliferate the money supply, their assets go up in that value, whereas the poorer half don't get to benefit from that. So a lot to talk about. We'll link it all in. Let's start off with obviously the events that took place yesterday, and that was in the form of CPI. So CPI is an inflationary metric for the United States. I think they're actually looking to take coffee out of this. The BIS is looking to take coffee out of this inflationary metric. Like, nobody drinks coffee, right? I'm sure none of us. I'm sure I already haven't had 4 or 5 cups of it this morning. But the CPI essentially came out slightly lower than the previous one, and also month on month came out slightly lower and beat expectations. So this is good news because there's been a lot of fear. So inflation really has been in an aggressive downtrend since it topped out at 9.1%. It kind of had its first high print on July 2023. And this is also perfectly, remember we've got this broader thesis for the dollar. This is a kind of macro chart going back to 2008 when the Fed actually started to add to their balance sheet. And I think that where we think the dollar's coming to the lower band is channel is supported by rates where they're at and where I believe they're going. So we've got this broad thesis on the dollar, which supports our risk thesis. You know, we're not just 1D traders. We're not just crypto traders with our blinkers on. We look at the whole picture and we try and figure out where crypto is in relation to it all. And it is the fastest horse in a game that's going up. But the dollar pretty much perfectly bottomed. You know, you can see July 2023. What was the date on this when we had that first higher print? July 2023. Markets are mechanical. There's levers that get pulled and something will pop up somewhere and something will, you know, so on and so forth. And obviously since then, if we put a little bit of risk on here, so we'll put Bitcoin in the form of the BLX, we'll put this on, and let's put gold on. This is what I'm talking about when I'm talking about risk. You know the correlation. Dollar up, assets down. Dollar down, assets up. And you can see they sort of sold off initially on the back end of the dollar kind of basing and bottoming. You can see this dollar strength really drove them down. But with the dollar coming down again, you can see they've all done quite well. But then you've had this strong period for the dollar, certainly here, that's leaned on risk due to fears around inflation, i.e. going sideways. I've seen so many takes of people saying the second wave's here, it's like the 1970s. No, ding dong. This is not the 1970s. You cannot compare the 1970s economy to where we are currently at today. It's like the people that said the reverse repo, the debt ceiling being up to was going to cause a crash in the markets because it did in 2019. Having failed to understand that in 2019 there was 100 billion when they started to drain it, dollars or less than that in the reserve repo, and that's why you had that clog up that would subsequently cause a yield curve that led to March 2020's events. Maybe there's an overlap there, I don't know. People were saying the same thing when we upped the debt ceiling back in 2023. Having failed to realize that there was now $2.4 trillion in there. The Treasury's been doing a damn good job of draining, by the way. And that's why we've seen markets, one factor we've seen markets do well under despite the QT. So this has been going sideways. Yesterday we got that slightly lower print, kind of giving people that little sigh of relief. Of course, this saw the dollar, we could have just left risk on. This saw the dollar, we can take the 30-weekly moving average off, come down. And what did risk do? It went up because inflation has been the driver, really the main mandate for federal policy. And we're now seeing cuts start to potentially come back. But this is, I think, signaling the continuation of a broader trend, which is a downtrend for the dollar. I think the dollar is going to go on and put in new lows. And risk is going to go on and put in new highs. Certainly, we're getting that technically when we look at everything. If we dive over to Bitcoin now, you guys will know where we're at. We've got that 150K target for Bitcoin. Been getting this chart exceptionally right. If we drop down to the smaller time frames, we're looking at this kind of flag-esque structure. It's a period of pause, period of congestion on the back end of that strong dollar. Now we may have certainly the start of data that looks for the reversion of that, coupled with obviously the weaker than expected non-farm payroll, which doesn't give them as much room to continue to hike and kind of puts the pressure on to actually cut. And also the amount in debt that they've got is doing a very similar thing. You know, at what point does QT in regards to interest rates going up become QE because of the amount of money you've got to print just to sustain the old system, which they need to, I say old system, it's the system at the moment, the debt system, sustain. So, very much a flag-like structure. Ethereum was a way better flag. I wonder if that's actually broke. No, it hasn't. You're likely going to, this is sort of basing behavior. You're likely going to get some sort of a real explosive move on the back end of this. Altcoin's setting up very well. The main chart for us when it comes to the altcoin market is total 2. And you can see I actually like this one a lot more. But we are looking for potentially a right shoulder to form in total 2. And for us to see $37 trillion. We've spoken about a number of things. We pulled up something really interesting the other day that we haven't seen really anybody talking about, which is ISMs. And how Bitcoin follows this and where this is at, and this being a really good macro reason to be bullish on top of global liquidity cycles, technically what we're looking at, so on and so forth. So yesterday's event was definitely significant. This is why risk did well. If we look at some risk categories, ISM manufacturing is just like a barometer for the economy. If we look at some risk categories like the SPY to add to this broke out of our broadening channel pretty perfectly, and it's now gone on and put in a new all-time high. NASDAQ, very much getting there. Let's see how our stock that everybody told us not to be bullish on is doing. Well, it's about to break out into new all-time high since we identified this, and we've still got 263K target. So Bitcoin is the fastest horse in this proliferation race that we do think is coming and going to be ushered in by dollar weakness. Interesting news in regards to silver. I know there's lots of crossover with the silver and gold people and crypto because we're both here because we don't trust governments. And we'll explain why you shouldn't trust governments and why they're playing this great big game on you in just a second. But holy moly, I love that saying. Is that a British saying? I don't know. Silver opened at $32.87 in Shanghai today. And this is obviously huge. Silver we're very bullish on. I'll pop up a silver chart very quickly. I mean, this is going to be insane when this breaks. And of course, we're bullish on gold as well. We think Bitcoin is in an uptrend against both gold and silver, and so is the total 2. But silver opening up very, very well. Also, we've seen continuous inflows into gold, certainly from Asia. The Chinese stock market is currently trading with gold miners and gold jewelry stocks experience a comprehensive surge. We're also seeing a load of people aping into Bitcoin. This is Millennium Management disclosed $2 billion position, by the way, in spot Bitcoin. These are some of your individuals that have been buying Bitcoin. The state of Wisconsin, everybody is buying Bitcoin. Everybody is buying gold. Why is that? Why is smart money? Why is institutions buying Bitcoin, gold, and anti-fiats? It's because they know that it's going to continue to be proliferated. We saw M2 increase for the first time. This is the great game, ladies and gentlemen. This is a chart of the top 1% and the top and the bottom 50%. They get poorer and poorer, and the top 1% get richer and richer for the simple reason, and it is this alone, that they own assets and the poorer half of society don't, which is why this channel exists, to help people get on the right side of a compound interest nightmare, or a compounding equation. It's not interest, although I guess you could say it kind of is. If something's devaluing, you know, is it an interest actually? Like, let's say that the dollar accumulative over the past year is devalued at what? Say 20% or whatever it may be, whatever the real stats are. That's a tax that's being taken from you because your wage hasn't increased at the same, and that happens year on year on year. So it is, I guess, a compounding interest equation that you're on the wrong side of. And this chart looks extremely similar to the money supply. And what happens when the money supply goes up? Assets that have a, I wouldn't say fixed supply, but more of a fixed supply go up with it. And this is the great game we're going to try and get you guys and girls, hopefully, to escape. If there are any girls watching this, of course, it's a very male-dominated area, crypto and finance, but hopefully we're bringing more equality to the markets. So that's really it from me, ladies and gents. Interesting, everything that's going on. Again, we've maintained this stance that we're not in the higher inflation camp. We're not in the higher rates camp. We were in the rates higher for longer camp, but we've actually looked at the context of what markets do under that situation, and they do quite well. And we are just going to see a resumption of risk. I think my dollar thesis is going to, it's been persistently strong, the dollar, but I think my Dixie thesis is going to play out. We're going to see that weak dollar on the back end of interest rates coming down. I was actually looking at the pound could be in a bit of a macro, it's been in a macro downtrend against the dollar, but it could be setting up a bit of a pattern that could see it do quite well. And ultimately, this is going to pump risk because they're going to continue to play the game that they've always been playing. They're going to continue to hollow certainly the middle class out and continue to impoverish people and bring them down to a level through the money inflation. And the worst thing about all of this is people think they're doing this through stupidity. Jerome Powell is not stupid. I love it when people think they're smarter than this guy. He is in that position for a reason. It's not because he's an idiot. It's because he's probably got allegiances to higher-ups. I don't know really what to say with that. But that's it from me, ladies and gents. Have a fantastic Thursday. Always a pleasure, and I look forward to seeing you all in the next one. All in crypto. Thanks a lot. Bye-bye.